As I said, I will deliver and create a trading strategy based on the previous video that I created a weeks back. So in this video, I'm going to show you a simple but effective trading strategy based on the fair value gap. So let's cover what we're going to talk about in this video. We are going to talk about the little bit of a theory, how to make analysis, the settings that I use, 2 types of entry model, how to place a stop loss and take profit. This is everything that we're going to cover in this video. It's not going to be a longer video because this is a simple but effective trading strategy. So the benefit of trading this strategy is you want a simple but effective trading strategy. If that is something that you are interested in, maybe this video is for you. But if you are not interested in that, you can use this video as an improvement to your trading style, and this strategy will work for scalping, swing trading, with just everything that you want. And it will also help you to improve your higher time frame analysis. And we are going to use an indicator because we know we are lazy to make analysis and spot fair value gaps in the market. I am one of those people. I don't have to spot the market and also give you some settings that I use from this indicator. So right now, let's start with the video. This is the basics here. The basics is pretty simple. All you have to do is to identify a fair value gap. A fair value gap, in simple terms, you have to find the first candlestick, the second candlestick here, we have the second one, and then we have the third candlestick here, right there. So if you look at the wicks here, you can see the wick from this candlestick here and the wick from this candlestick. They don't touch each other. Like price doesn't trade on another candlestick's price action, unless if we had something like this, we can clearly see that if we draw a line from the high, that means this candlestick closed the gap. That is all. At least you can try to understand fair value gaps in this situation. But based on this strategy, we want to see a fair value gap, and most of the time you'll find these fair value gaps in the beginning of a trend. They like to close a lot in the beginning of a trend, and then they like to open maybe when price is starting to be very aggressive. So from here, like for example, we have a break of structure here of this candlestick. I'll just say candlestick or swing high, and then we also broke this low. But inside here, we can clearly see that we are trying to at least try to correct. But if you find a fair value gap here, you can still try to enter the market right there and then move to the upside and target this previous high here and even here. But the only problem is, how do I enter this kind of trades? It's pretty simple. All you have to do, find a fair value gap, find the market structure, also find this candlestick here. Your stop loss will always be on the low of this candlestick when price closes this gap. You will see those examples when we move forward. So when every time you see that you have a fair value gap, this candlestick will be closed. That means you can put your buy limit order right there for price to touch the first candlestick's high, and then you place a stop loss on the second candlestick's low. I hope you understand what I mean. The first candlestick will be your, let's say, analysis, or maybe the high will be the trigger point, and then second candlestick will be your stop loss price. Then the third candlestick here, the third candlestick will be our fair value gap. Let's just say fair value gap close or something like that. The third candlestick is the one, when it closes, it will create that fair value gap in the market. You have to understand that. Stop loss on number 2. That's pretty much everything, because this is a simple trading strategy. You don't have to make your brain go hard on it. So right now, if I have anything that I forget, I'll continue with this video. So the only thing that I want to show you is the settings from the indicator that I'm using right now. These are all my settings. Everything is just off here. Everything is just off. The only thing that I put it on is just the fair value gap, and then I have extended the fair value gap. Show last, I made it to 10 because I want to see more fair value gaps in the market, and so many things are just off here. So right now, let's move on to at least an example here. You'll understand. There are so many examples. Let me just clear everything. You can clearly see that right now I have a lot of fair value gaps here. A lot of fair value gaps. You can clearly see, have this one, I have this one. There are a lot of fair value gaps in the market right now. So for us to trade this kind of behavior, it's pretty simple. Let me show you with this one here. You can clearly see that this one, if I wanted to trade this one, it's going to be very, very easy to trade. I see that we have a gap from this high and then to this low here. What is this? And then to this, from this high here and then to this low here. So to enter the market in this situation, I will wait. This is the first candlestick. Let me just name them. We have the first, which is this one, and then we have the second, and then we have the third. We have the third candlestick here. So in this situation, I'll wait for the market. Maybe I'll place a sell limit order here. Let me just change this. Apply default. So in this situation, I'll just place my sell, put my stop loss above the second candlestick, and then target it is to 1:5 sometimes. It depends how the market conditions. You can clearly see this is very simple. Just put your stop loss right there after you see a fair value gap between 3 candlesticks. There are a lot of examples like this one on any time frame, a lot. Let's move on. You'll see. Let me just choose another pair. Let's check the US 30. You will see an example here. There are a lot in the market. Even this one on the 5 minutes right there, you can clearly see that we have a fair value gap in between 1, 2, 3. Place a buy limit order right there at the high of the first candlestick. That means from here, put your long position, stop loss right there. But because right now I'm just making this analysis plainly, that means the market might even push to the upside, and you can clearly see that it's trying to push to the upside at the current moment. So that's basically everything that you need to get started. Every time when you see a fair value gap, try to place your buy limit order or sell limit order. But here's the catch: you don't have to trade every fair value gap. You have to look at the market structure. That is why I have the market structure here on the indicator, so that I can see, you can clearly see that we have a change of character here. That is why this fair value gap is of a high quality, if I may say. Okay, so right now we can even move on to some pairs, like let's say on gold right now on the 15 minutes time frame. This one, I think I was just backtesting something else, but you can clearly see that we have a fair value gap here. This should be your sell limit order, will be right there. Just a limit order right there, stop loss above the second candlestick's high here. Okay, and then you target either the low here. That's how basically simple it is. You'll find this kind of setups every day. They are everywhere. You can even scalp every day. So if you want this indicator, obviously I've been talking about it. The link will be in the description below. In this video, I just wanted to show you a setup. And sometimes a fair value gap can be created very quickly that you don't even see it in plain eyes. So like this one here, you can clearly see that right here we have the first candlestick, we have the second candlestick, and then we have the third, and it closed around this area here. So the indicator can show us that okay, we have a fair value gap here. Then when this candlestick opens here, you have to be prepared to make a sell limit order around this area. Then you place a sell limit order, place a short around there, stop loss on the second candlestick, and then you target either the low or target previous fair value gaps. And you can clearly see that we have a lot of them here, and price is also breaking the structure. But at the current moment, we can see that price is just rejecting. So obviously, if you entered this trade, you'll be profiting from it very easily. It's not even that difficult to understand. This one could have missed very easily. And by using this indicator, don't use it blindly, because a lot of indicators, they don't work like in real time, but this one works perfectly in real time, as you see. So the main point is that every time, like let's look at the market structure very quickly here. Let's say we have a market structure here, we have a market structure, and we already know that market structure doesn't move like in a straight line like so many people portray it. Market structure is very difficult to understand. We have, I'm going to make this as difficult as possible. We have a move to the upside. Let's make it bigger. You'll understand market structure based on this. We have this move to the upside. Okay, then I want to make it like very difficult. I hope this color is not going to make you go blind. And then we have this move the downside. I'll make it red. This one, because it's breaking the structure, is going to be bigger. And then we have this one here. This is a correction by just looking at it, because rise, this leg is trading inside the price range of this move. This is in correction. So inside this area and this area, there are a lot of moves that people don't see. But if you use some sort of price action, you'll understand them very easily. Inside this move, you will see that there is a move like this, until we break the structure. And price, most of the time, before it can move to the downside, price has to do some silly moves around that area. Like you can see that it's going to be a little bit difficult to trade inside these things. I'm just making up the structure that you are likely to see. Okay, something like this. This is the complete structure of this move here, but let me decrease it so that you can see it very clearly. So inside this area, where you should look for those setups is around these areas here. You'll see them very clearly. Around these areas, this is where you should look for those kind of setups. And the ones that are very powerful when you want to make a sniper entry is when price manipulate a low or a high. If it manipulates a high, that means you should take a sell based on the previous fair value gap that you see on the market. So the main problem is that most people don't even see those highs and lows. But if you use some sort of candlesticks pattern, everything will become very easier to see in the market. I'll try to demonstrate that to you guys. Like for instance, if you want to make a sell around this high, you will see a fair value gap that is coming from the other side of the market, like around this area. If you want to make a buy from this area, you'll see a fair value gap around this area. Price will come from here, very strong. This will be a strong move, and then it will reject very quickly to the upside. And this structure is not even clear at all, but let me just show you. Let me just go to my favorite pair here, GJ. This move, don't be scared of this kind of moves in the market. They like to push down. After every strong move, there has to be a correction after. Market will always try to correct, and if the market is very, very strong, it will correct very quickly. So I wanted to show you that here. Let me draw the structure from this. You will see the market structure very perfectly. Let me see what I can do here. You see that market structure is very, very difficult to see and trade. You see, I'm drawing the market structure, but this is not a complete market structure video. I'm just skipping the other ones. If we take this out, you'll see how the market really moves. You can see this is just a mess, and this is not the full picture of how the market really behaves on a daily basis. This is very, very complex on another level. But to see the market structure very clearly, you can use candlesticks. To draw this, I used basically candlesticks to see the highs and lows. So to draw something like this, to understand the market, what I did is that from here on this area here, what I did is that I just took let's look on this candlestick. We go lower, we go higher, we go lower, we go higher, then we go lower, go higher, we go lower, higher, lower, we break the structure, go low. This is how, at least by using the candlesticks, you'll understand the market structure. Push higher, lower, higher, lower. If you look at this, look at this. This is a perfect example of how the market really moves. Perfect example. And for those who don't know, I like to hold my trades for a longer period of time. I have a trade that I've been holding for 6 months so far, more than 6 months. So this is the whole market structure here. But inside this market structure here, there will be so many fair value gaps that you can take advantage of. So let's look closely, because I'm just demonstrating on what you can do in the market. This is not a backtesting video. Here you can clearly see that on this move to the upside here, we have a huge fair value gap. This can be used as an advantage. So to enter the market in this situation, you are going to place a buy limit order around here on this high of the first candlestick. This is the buy limit order, and then the second candlestick will be your stop loss level, because in this situation we are taking a long position. So that means our stop loss will be around this area. And then because right now we are moving to the downside, and we also broke this structure, and we also manipulated this low on this side, that means we can target this for price to move to the upside. So your trade will look something like this. We go long, place a long position here, place a stop loss on the second candlestick that created a fair value gap in between 1 and 2. This is the candlestick that you should make your stop loss, and then you target this high. This is a 1:7, very easily, no drawdown. And another thing, someone will see this without backtesting. Always backtest, because you'll see some of the losing trades. Let me find one. Let me find a losing trade, because it's not even that far. This is another simple one. We break the high. Can see we break this high, we push lower. Let me just clear everything. You'll see it perfectly. So let's start with the market structure first. You will see this plainly. I will start from this area. I'll start from here. You will see the market structure very clean. So let's look at this market structure from this area. I'll start from this one. We push higher, we move lower, push higher, lower, higher, lower, higher, lower, again higher, and then we move aggressively to the downside. You'll see the market structure perfectly here. Let's move this thing to the side. You can see that we broke the structure around this area here on this candlestick right there, and also we have a fair value gap starting from this candlestick to this area. This is a huge fair value gap here. Then from here, this is where you should put your sell limit order after you have identified the break of market structure right there. Then your trade will look something like this. This is the second candlestick, not this one here. The second candlestick is this one here, and then you enter the market to target another fair value gap here, and you can clearly see that we have this fair value gap around this area. Even though price did not touch it, it reversed very quickly. But obviously after price has broken some lows, your trade will be on break even. But myself, I like to, at least this candlestick, when it closes, I put the trade to break even like this, and then forget about everything. But I guess this is the end of the video. I'll see you on the next one.